This program is brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.
Hello and welcome to the Global View on this Monday. I'm Andrew Gagan. Thanks for joining us again here at AusBiz as we kick off the week. Let's first take a look backwards and see where we finished on Friday. Well, US markets were closed for Independence Day, but global investors remained focused on the US, with President Trump signing his tax cut bill into law. This comes ahead of his July 9th deadline this week for countries to secure trade deals with the US or be punished by tariffs. S&P 500 futures edged down around 0.5% on Friday, while global equities fell also, with the Pan-European Stocks 600 index down 0.5%. with the banks, mining-related stocks and retailers among the top laggards there. And the Stocks 600 is currently up around 6.5% so far this year. Meanwhile, the S&P 500 has now eclipsed that European index in terms of year-to-date gains, with fears about US tariffs hitting European stocks. The S&P up almost 7% at a record high, thanks largely to gains in big tech. The Nasdaq also closing at record highs, notching a third week of gains, and the Dow just shy of its own record. Meanwhile, the VIX, Wall Street's fear gauge, has fallen around 67% from a peak following Donald Trump's tariff announcements in April. However, in Europe, investors remain wary of new listings. German medical tech firm Brainlab postponed its IPO last week, citing geopolitical uncertainties. While Big Pharma company Started delayed its debut in March, citing market volatility, and Glencore-backed metals investor Cobalt Holdings, which was planning London's biggest IPO of this year, failed to secure enough investor interest. Well, as President Trump's July 9th deadline approaches, Treasury Secretary Scott Bessent has indicated that some countries lacking an agreement by the deadline on Wednesday will have the option of a 3-week extension to negotiate. European Commission President Ursula von der Leyen has said the EU was aiming for a trade agreement in principle with the US before the deadline. Japan has sent its chief trade negotiator to the US, with a deal between the two countries having stalled. The Japanese PM saying they will not easily concede in the negotiations. Indonesia has offered to cut duties on key imports from the US to near zero and to buy $500 million worth of US wheat. And China has imposed duties of up to 35% on brandy originating from the European Union for a period of 5 years. Eurozone producer prices in May fell 0.6% month on month and rose 0.3% on the year as forecast. Meanwhile, ECB President Christine Lagarde saying we have a lot of uncertainty, a lot of unpredictability around us at the moment, but on the price front, we will be certain and stable. Here at home, Australian 3-year government bond yields have fallen to 3.31%, the 10-year down to 4.22%. Markets pricing in a 95% chance. The Reserve Bank cash rate, currently at 3.85%, will be cut by 25 basis points tomorrow, with at least 3 more cuts in this easing cycle. The US dollar index unchanged on the day on Friday, with risk-sensitive currencies underperforming the Aussie at 65.5 US cents, and Bitcoin trading back above 109,000 US dollars. Oil futures slipped slightly in thin holiday trading on Friday as the market looked ahead to the OPEC Plus meeting on the weekend, with members agreeing to lift production by a larger than expected 548,000 barrels a day in August. And crude futures down at $68 a barrel. Copper was off 1.5% on Friday, iron ore easing to $95 a tonne, and gold rebounded to be up for the week, trading at around $3,333 an ounce. Well, let's get across global markets with a focus on the US. Greg Boland joining us again from Tiger Brokers. Greg, happy Monday to you. Let's look back, of course, as we mentioned there. US markets closed on Friday for that Independence Day holiday. But we do have record highs there for the Nasdaq and also the S&P. With, I see you point out some of the large bank analysts there. They remain optimistic that we're going to continue to see this bullish momentum for the latter half of the year.
Well, the S&P 500 obviously is the bellwether of the market. It's record highs last Thursday, 62.79, and an intraday high of 62.84. Of course, it it got smashed pretty hard in early April, given the Liberation Day things, and therefore it fell from its high of 61.47. So that 61.47 has now been surpassed and well surpassed, and we would see that as our current support. And then obviously there's no upper level because we're well above the levels it was before. Of course, the S&P 500 covers 80% of the US market and is the bellwether. And a lot of the large bank analysts are becoming very optimistic about the prospects for the index. Some thinking it's going to be as high as 6,500 by year end. And these bullish forecasts seem to be underpinned by expectation of lower interest rates over time and easing inflation, but also some of the pro-business policies of Trump and the continued momentum of AI and the AI stocks.
Yet, Greg, there are still those risks, though, aren't there? Not the least being what's going to transpire this week as we head into August with Trump's trade deadline. Plus, we are seeing those rising bond yields.
Yeah, so the rising bond yields and the trade tensions obviously is really, stymieing even further gains. But hopefully from here, people are starting to look through that and not being so surprised by the shape of the tariffs and that as they were, in early April, and now people are taking on board what is likely to happen, and people are becoming more optimistic.
Are we likely to see seasonality at play here? Because typically we see a strong July on Wall Street and then a bit of a sell-off heading into September and October.
Yeah, that's typically August, September, and then October, obviously often down months. So people go on holiday a lot in the US in August, so therefore, people start to pull back a little bit and try and take some of the gains they've made. So, we had a very strong June and shaping up to be quite a strong July as well. And all the different indicators are indicating a lot of strength. So obviously the main indicator is the index itself, but also volatility. The VIX has fallen below 17, and 17 is often seen as a level. Above 17 is bearish and below 17 is bullish. So that's helped. Put call ratio is back under 0.5, so at 0.48, so 48 puts written for every 100 calls written. So that's pretty bullish as well. And things like market breadth and things like advancing, declining indicators and new highs, new lows. On Thursday, for example, new highs were 94% versus new lows 6%. So a pretty bullish indicator right across all the different indicators at the moment in the S&P and the US market.
Greg, we've also seen a rebalancing of the S&P 500 where some stocks have fallen out, some have been added. Most notably, we've got DoorDash that's disappeared. Whereas added, we have the likes of Datadog. What are you seeing there?
So the index itself, and that's probably one of the main things that the index has rebalanced on a quarterly basis and on ad hoc basis if something happens. So in March there was a rebalancing in DoorDash, TKO, Williams Sonoma and Expand Energy were added, while others were removed. And then in the June rebalancing there was a lot of thought that some other stocks should come in like Robinhood and AppLovin, but they weren't included and therefore they got sold off. But sometimes you have these ad hoc things, and in the last week, a stock called Datadog, DDOG is the code, was granted admission to the S&P 500 as of Wednesday this week, and becomes the 5th company to do so in 2025. Datadog listed in 2019 is up 315% since then, compared to about 109% on the S&P itself. Why does this change occurred? Why has it occurred at an ad hoc basis? Well, in this case, Juniper Networks was acquired by Hewlett-Packard Enterprises, and therefore that opened the door. So one stock was delisted because it got taken over, and therefore Datadog was then included. So the stock itself jumped last Thursday by 15% on the index news. And it's big news for a company because all the passive funds, all the index funds, all the big ETFs on the S&P 500 and various others must include Datadog in their portfolios now, and therefore it definitely helps a stock to be in the index rather than being out of it.
Greg, great to get across what you are seeing on Wall Street at the moment. Thanks for joining us from Tiger Brokers.
Thank you very much.
Let's take a quick look at where we're likely to get going. And SPI futures flat, bearing in mind we did finish Friday at a new record high for the ASX 200. Stay with us. The Dean's going to get you across the open in just a minute.
This program was brought to you by LGT Crestone, local private wealth expertise backed by the stability of a global presence.